Welcome back to Trading 360. Time for the disruptors. And George Tsilis is with us, senior markets correspondent here, to talk about Super Microcomputer. Just got an upgrade over at Wedbush. Tell us a little bit about the company and this upgrade.
Yeah, Nicole, we talked about Supermicro, I think, about 3 or 4 months ago, but this is really a proxy play on Nvidia. They basically provide or supply the marketplace with high-performance back-end server systems that, of course, help host applications and, of course, solutions and services that are associated with artificial intelligence. And if you look at Supermicro, everyone talks about Nvidia, but this one's actually moving in sympathy with Nvidia, up about 215% on a year-to-date basis. And again, when you think about artificial intelligence, you have to think about the hardware or back-end server markets, which power or host, from a cloud standpoint, the technologies associated with artificial intelligence. And some of the mainstay competitors for Supermicro include big players out there like IBM, Hewlett-Packard Enterprises, NetApp. But some of the customers include, of course, partners like Nvidia, Google, and Amazon utilize Supermicro's technology. Now, Wedbush actually upgraded the stock to neutral from underperforming. They've got a price target of $250, and they actually see now the compelling reason why the stock may actually be in the short term pretty balanced, considering the stock has made such a huge move over the past year. They actually see a demand for their accelerated server technologies actually very stable going forward, but considering price action this last year, they actually see the stock now being relatively balanced for valuation. You can also see Susquehanna about a week and a half ago increased their target to 300, but they also maintain more of a neutral rating on this name as well.
Right, understood. So at this point now, what's the example trade?
Yeah, so looking at this, everyone's really focused on Nvidia, but one of the things you'll notice, or I noticed, is that the implied volatility in the options for Supermicro is extremely high, especially for the expiration in 2 days on Friday. And that's, again, because this is a proxy trade, if you will, or a sympathy play alongside Nvidia. So one of the things we can do is, if you look at the chart, there's a gap in the chart that's affiliated with the earnings going back a couple of weeks. And the gap actually looks like it may fill back to the upside around the 310 area. Now, we have to consider the trend, which is still bullish. So what we can do is we can play probabilities. We can also play the volatility compression going into earnings and at the expiration at the end of the week. While at the same time, again, we can play more of a neutral to slightly skewed trade on the bullish side. So we're going to put on a credit combo, and this one's going to be very narrow with 2 days to expiration. If you look at the market maker move, the expectations by Friday in terms of the stock movement is about $21. So what we're going to do is we're actually going to sell 2 times that market maker move, or 2 standard deviations to the upside and 1 standard deviation to the downside. So this is skewed, again, slightly to the upside. So we'll sell the 320, 330 call spread. Now that's above the current price by about $40. And then below the current price, we'll sell the 260, 250 put spread. Now altogether, you could earn about $3 a share or $300 a contract. So that's your total reward. Now, if the stock does trade within those ranges of the short strikes, somewhere between the 320 on the upside and the 260 on the downside, that $3 will evaporate quickly. So the objective here is to sell high and have the options become worthless. And this is, again, I stress, it's a risky trade because we only have 2 days to expiration on this trade. But it's making an assumption that that probabilities will hold. At least 2 standard deviation move to the upside, and again, 1 standard deviation to the downside.
I love it. I love when you come out with something like this. It's a little different. It's a little riskier. It's right on. It's going to happen now. We're going to know the answer very soon. But
very shortly.
It could be very, lucrative. So thank you for that, George Tsilis. Great to see you. Thanks always for our disruptor.